Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as always, I'm looking for stocks to buy to add to the portfolio. Stocks not just for me, for the community as well, to bring to your attention to some of the companies out there that could potentially be a good addition to our portfolios. And as usual, I came across one company today that I think is worth talking about, and that is Lam Research. Lam Research designs and builds products for semiconductor manufacturing. So includes basically stuff that they need in order to produce these semiconductor chips and so on. So they have a loads of different things like these things here, right? That was the little things that they used to be to design the actual chips. And they have so many different products. So when, for example, companies like Taiwan Semi, for example, wants to create the product and so on, they have to get the equipment they need from this company to be able to do their job. Same goes for companies like Intel and so on. So what I want to do today is just look at the financial side of it, okay, to see if this company is actually worth investing in. And just looking at their financials, this is basically what they reported recently. You can see the system revenue segments from logic to NVM to memory to DRAM, so DRAM, dynamic RAM, and so on, foundries. So they have loads of different sectors, okay, that or segments if you like. So it's quite well diversified. Now, if you look at the region side of things, you can see from China to Korea to Taiwan to US, Japan, and Europe, and so on. So they are very well diversified in terms of the revenue. I like this because this gives us an opportunity to obviously invest in companies like emerging markets and so on. I don't like just investing in one sector or whatever. Now, looking at the current revenue, so there's a lot more information anyway that you can find from the company website. But one of the things that I want to talk about just generally right now is this company's revenue, okay? And if from 2014 to right now, it has been growing every single year. So as you can see here, okay, and if you can see here the numbers, that's 2014 was about $4 billion to right now $17.4 billion in the trailing 12 months. That is huge growth, okay? That is absolutely huge growth, and this is what I'd like to see. So sometimes you look at a company and you think, okay, what is, do you see it flat or going up and down? The only time it kind of went down, it was basically 2020 when the whole world shut down, and then since then it actually bounced back very quickly. So it's interesting to see basically that sort of a growth. So what I want to do now is I want to go over the financials of this company to see if it's actually worth looking at. There's obviously the competitors like KLA that I used to own before. I've never owned Lam Research. So let's have a look. As always, we'll start with the first section, which is the basic information of the company, the semiconductor company. The name is Lam Research Corporation, and current price is $668 per share right now. EPS about $33 per share right now. And then when we look at the market cap, is $88 billion. So it's not a small company at all. It has a wide economic moat, and it has a beta that's above 1, which means it is quite volatile. And I have seen this, to be honest. Sometimes it swings back and forth like 2-3% when the markets are doing similar or lower. In terms of PE right now, we're looking at about 20, but the forward PE is about 25, which is interesting. In fact, let me just double check that, because I thought it was lower than that. Yeah, it's about 25, 24.7. Okay, that's interesting. And then 5-year average is about 13. So it seems a little bit expensive, but look at the sector, 35. Basically the technology sector right now is actually crazy right now, 35 PE. The S&P 500 is only 23. The price to free cash flow though is about 19, and PEG ratio basically about 2.48. So this kind of tells us maybe this company, it might be just a little bit overpriced, okay? Dividend yield of 1.2. Payout ratio of 20%. Latest increase was basically 16%, which is huge. And look at this, the 5-year growth rate of 22%. Okay, 9 years of increase in that dividend. They pay $8 per share right now. So every single share of this company you own, basically you get basically $8. Okay, dividend safety 66%, which is quite low. 61 and above is fine, but 66 is actually a little bit low. Free cash flow 4.68, so they do have quite a little bit of money. Again, these companies can be capital intense because they actually have a lot more basically to do the create the product, type of product that they actually have, they have to invest a lot of money. So and obviously they have to be innovative as well. They have to move with time, right? Free cash flow yield, we're looking about 5% right now, over 5%, which is really good. And free cash flow margin is about 27%, which is absolutely huge. Now, profit margin is about 26%, operating margins are about 30%, return on equity 55%, and total return the last 10 years, we're looking about 31%. Return on invested capital 36%. This company is killing it when it comes to profitability side of it, and the growth from the last 5 years in terms of revenue compounded annual growth is actually 15%, which is absolutely really nice. Current ratio, we're looking at about 3.2%, which is basically perfect, because normally anything above 1 tells us the company has enough liquid assets that they can liquidate if they need to in the next couple of in the next 12 months. And this is the reason I wanted to talk about this company. Look at this. They're expecting the earnings to grow about 30% this year, next year, and then 8% every single year for the following 5 years. Again, it's just the estimates, okay? Don't fall for it, but it is a good estimation, okay? So that tells us the company is doing really well. I'll show you what basically this looks like in Seeking Alpha. If we go to earnings, for example, and we go to estimates, okay, you can see 31%. So this next year, basically 2024, they're expecting a little bit decline. I think they started already their 2022 fiscal year. So I think they already reported the first quarter. Every company reports a different timing, so I think they have already. So maybe at the end of this year, they might be here, but then after that, 31%, 20%. 17%, 10%. But if you focus on the first 3, you see the next 31% and the 20%, which is absolutely huge. In terms of revenue, from 14.5 to maybe in 2028, for example, like 10 billions more than where it is right now by basically 2028, which is absolutely huge. So 19%, 14%, 17%. Again, really, really good in terms of that side of things. Current price we've already seen, fair valued according to 9% premium according to Morningstar. So it's a little bit, like I said earlier, it seems a little bit expensive right now, but according to Simply Wall Street, is undervalued about 6% right now. So 714 is basically where they expected, and then price target from TipRank is actually closer to 700, 3% an upside, and it's a moderate buy from them. Same goes for Seeking Alpha. These two actually use the same sort of analyst, so it more or less the same, and it's a buy from Seeking Alpha. Sharia compliance side of things, no worries whatsoever in terms of business side of it, interest-bearing debt and interest-bearing securities. And as you can see, they have been aggressively buying back their own shares for basically quite some time now. They've diluted in 2017. Since then, they actually been buying back their own shares, which is really good to see as well. So that's the company that I wanted to talk about. This is the type of business I normally look for. And the reason is, if they have a solid customers, if they work with some of the biggest companies out there, that means they will have predictable revenue. And this is probably why their revenue has been going up for the last 5 to 10 years, every single year. Because, you know, the companies that use their product are not going to go out of business anytime soon. So that sort of predictability is actually what we're looking for in a business. I used to own KLA. I will maybe look at that again as well to see if it's actually maybe better than this. They have similar sort of products, if you like, slightly different, but similar. There's some similarities. But this type of growth is basically what I'm after, and this is what we should be as investors. This is what we should be looking for: companies that are rapidly growing their revenues, not companies that are like literally have a declining revenue. But also you need to look at obviously the gross profit from that. So based on how much they've made, how much of that are they actually taking? Then obviously after they pay taxes and all of that stuff, then the other thing you need to be looking at is their net income from that. Okay, so the net income is also basically increasing. So there's a lot of things that we need to look at as investors when we're basically analyzing these companies that maybe I should be talking about more often, inshallah. But yeah, that's the company that I wanted to talk about today. I hope you're enjoying this type of content. If you are, please like the video, subscribe to the channel, obviously. and yeah, join us on the Discord, because this helps a lot. I'll be honest with you, this YouTube thing doesn't really help as much. What helps me the most is basically you guys joining here, get those little things that you actually after the spreadsheets and so on. In fact, I'm updating the ebook right now, as well as some of the dividend trackers. So join us please, and just that, you know, just 1 month, trial it out, see how it goes. Go to the Discord, you know, talk to like-minded people. I post a lot there, but obviously other brothers and sisters are obviously posting it there as well, sharing their basically what they're doing and so on. I want to build a hopefully, you know, massive community that we can, you know, where I can just sit back and let you guys do your own thing, and just maybe here and there just post the odd videos, and if we can get to that stage, inshallah, it will be absolutely amazing. Anyway, I'm going to stop the video there. Like I said to you guys, I don't own Lam Research. I do own other semiconductor companies like ASML. I do own Broadcom. I do own Qualcomm as well. So just to be transparent. Anyway, I'm going to stop the video here. Have a wonderful day. Assalamu Alaikum.